Hi there, hello everyone. What is core retail sales on a monthly basis? This is a very important economic indicator as part of fundamental analysis. So let's see what we have. So what it is? It's a leading macroeconomic indicator that tracks consumer demand for finished goods. And retail sales are reported each month by the US Census Bureau and indicate the direction of the economy, that which way the economy is heading. And it acts as a key economic measurement tool and determines whether there are inflationary pressures or not. So it is also a tool to measure inflation as well. So how it is derived? Data is gathered by the US Census Bureau and includes sales from 13 types of food service and retail stores. So there are two versions of it. One is core retail sales and number two retail sales. Okay. And retail sales excludes automobile sales. Okay. Because automobile sales account for about 20% of retail sales, but they tend to be very volatile and distort the underlying trend. The core data is therefore thought to be a better gauge of spending trends. Okay, so in retail sales, we do not count automobile sales. Okay, all right. So the report provides an insight into the expansion or contraction of the economy, and analysts and investors gauge the health of the economy and any inflationary pressures that may exist. So this is because of very important data about retail sales, and it also feeds into the gross domestic product and also into manufacturing and economic data. So if the economic output or outlook is good or positive, then you will see positive employment. And then if on the other hand, if it is the economic output is low or negative, then you will see downward employment, you will see more unemployment. And this data is calculated on a monthly basis. So what is the possible outcome of retail sales? So if the falling retail sales figures come regularly, then it indicates that the economy is weakening. And if there is a consistently strong data on a monthly basis, that could show an upward and strengthening economy. Okay, so retail sales. So when the data comes out in the market on a monthly basis, so if actual is greater than forecast, it's good for currency, and if the actual is smaller than forecast, then it is bad for the currency. I mean, this is kind of a standard rule for all the economic indicators. If the actual data is better than forecast, it's good, and if it's not good or smaller than forecast, it's bad for currency. Okay, it's released monthly 16 days after the month ends, and on forex calendar it is categorized as red news. So that means that this can create a certain level of volatility in the forex market, and forex traders need to look at it very closely, and they need to understand the data figures and then develop their strategy accordingly, because on the basis of that they can either trade into profit, or unfortunately they can also trade into losses as well. So we also call retail sales as advanced retail sales, and we have core retail sales and then retail sales. And in retail sales, we exclude automobile sales, as I mentioned in the previous slide. Okay, so what actually happens when the data comes out? So analysts release forecast and predicted figures ahead of the data announcement. So what is the possible output? Possible output that the data could be above expectation or below expectation, and in either case it could have a positive or negative effect on US dollar and US dollar driven markets. So based on this output data, what is the outcome that the market will actually face or suffer? So retail sales data, if it's better than expected, one possible outcome could be positive, that it could have a strong US dollar versus other currencies. And if it is lower than expected, then the negative outcome would be that there will be a weak US dollar versus other currencies. And definitely for forex traders, they have to look at this data very closely, so they can develop their spread betting and CFD strategies based on the data figures when they come out about core retail sales. Okay, so what happens? What are the trading strategies? How to trade core retail sales on a monthly basis when the data comes out? Definitely, you will see volatility in the market, positively or negatively. Prices may go up or may go down. So this is where the forex traders come in and they try to look at the data and develop their strategies. So based on their strategies, they can either trade into profit or trade into losses. So this is where it becomes tricky. So you have to be experienced enough and you have to be vigilant enough to understand and read the data, what does it mean, and then you can go into a trade. So when you do that, so volatility can lead you into profit or losses. You may end up with large short-term profits, but at the other end you may also end up with greater short-term losses as well. So this is volatility does to everybody, profit or losses. And when you have that, you have to have your risk management strategy in place while trading. So it's therefore very important to pay attention to your risk management approach. And when you have that, you must have your risk management action plan in place just in case something does not go correct or goes wrong as you had initially imagined or analyzed. Then you must have something to fall back on, that you can control your damage or losses, that you can actually tolerate. So this was an overview of retail sales and how we can take trading or trades while we study the retail sales data on a monthly basis. Alright guys, I will stop here. I hope you like the video. I will see you next time. Have a good day. Bye bye.